Okay, good morning, everybody. Jenny Ifft. I think it's mostly familiar faces here. I teach agricultural policy here at K-State. I'm also the state extension specialist in agricultural policy. So one of my areas is my outreach program and my research program is on forage and livestock insurance. So today I'm going to talk about two things: what safety nets are available for forage producers, and I'm going to talk about some hay inventory tools that we've been developing in addition to some tool that we put out. Was it 2 or 3 years ago, Robin? More than that. Okay, I don't want to think about 22. It might have been 22. Anyway, why are we talking about this? Well, as you know, there's demand from dairies and feed yards as well as cattle producers for forage. In places where there's declining water availability, whether that's a LEMA or just general for other reasons, it's an option for producers to maybe capture some more value. Drought concerns: producers might increase forage production if there's a drought. And this last point, continued awareness gap of some of these forage projects. I know in a lot of parts of the state, there's pretty good awareness of the PRF insurance. I came here 4.5 years ago and I kind of briefly mentioned it at our crop insurance workshop. And I said, well, Monty gave a great presentation on this like 2 years ago, so you guys are good. And they were like, no, we want to keep hearing about it. And yeah, we generally keep hearing the issues about this. So that's one of the reasons I am covering some of these issues again. Anyway, step back and talk about the safety net. We have sort of a broader set of programs that we jointly refer to as the Federal Farm Safety Net. You all can see that okay. And usually you typically think of this in terms of crops. So you got your crop insurance, all kinds of programs there. You got your Title I Farm Bill programs, ARC and PLC, and standing and ad hoc disaster programs. For crop insurance, there's an increasing number of options for forage. It's not nice and neat like here, for corn, most people have 70% revenue protection. There's a lot of different options, some of them with different deadlines. For Title I, those don't cover forage, but you do have the flexibility to grow forage on your base acres. And then the disaster programs are becoming increasingly important. LFP has made a big difference in recent years, as well as ELAP. We'll cover those again. In some cases, though, I would say that forage hasn't been covered by the ad hoc program. So, I looked at one of the COVID-related programs, CFAP, and it looked like only alfalfa hay was covered. Just a couple definitions here when I'm talking about forage. I'm from Illinois. This might be more for me than you, but hay, perennials, alfalfa, also annual forage. It's crops that can be grown for that. Crops that can be used for silage, as well as our pasture and rangeland. First of all, you can use regular crop insurance for forage, and I mean is your multi-peril products. And these are used pretty universally in a fairly consistent manner. You might see like 90% of acres are covered. And there's no reason you can't feed this insured grain to livestock if it works. But if it's insured as grain, it has to be appraised as grain. So you have to be able to measure the yield as grain. I think that happens a lot for corn silage in the state. We do have a one silage endorsement, so you can insure sorghum as silage. We don't have that for corn yet. There is a APH, so a yield product for triticale. It's mostly used in western Kansas. It's relatively new. And then we have a very new forage seeding product that's available in about 7 counties. It might have expanded the last round, but really just emerging. So for the silage specific products, right now, this is just sorghum. For corn, you have to insure it as grain. And I actually checked with RMA on this. So if you're in another state and you grow a silage specific variety like BMR, that typically has to be insured as silage. So that would not be considered insurable in Kansas. The other thing to know about the silage specific product, it's not revenue protection. It's an APH or yield protection, which means you don't have the harvest price option, which means if there's a drought and prices go up, you're not gonna increase your guarantee at the end of the season. Which, again, if you're using this to cover your forage replacement costs, it might be a little bit short. You might just have to know to plan ahead for that. And yeah, silage sorghum isn't, you're looking at 40,000 acres. Probably a lot less than it's used right now, but it's mostly Western Kansas. Then you have the triticale APH, that's a yield product. Getting closer to the Flint Hills, but mostly in Western Kansas. This is grain, so again, you could use it for other uses, but you have to be able to measure the yield as grain if you want to make a claim. So this is, we're looking at about 30,000 acres, which is less than USDA reports as being harvested for grain. So presumably this isn't all used as grain, but it's a lot lower than the amount of triticale that's being grown in the state right now. Forage seeding is the other one. I think I just learned about this within the past year. It's only available in 7 counties right now. A lot of times when they introduce new products, they kind of expand slowly over time or based on demand. So right now it's about 7 counties. There's no policies attached in 2023, so might have been purchased but they didn't end up using it. 95 acres from 2 policies were covered in 2024, and about the same number of policies were sold in 2025. So that's a dollar amount policy. So just kind of so you're aware that that's out there. And, I think RMA does respond to, if there's increased demand for something, they're able to rate it, that, they you can do a written agreement or talk about it expanding into different counties. Couple notes. Again, we don't have an option to insure corn as silage, so that's what I understand is that's due to lack of demand from industry. For triticale, as well as some of the other crops I talked about, there is a contract price option. So this might be more of a, if you're working with feed yards, but if you have a contract for triticale and there's a yield and you have a set price and a set quantity to contract, you can use that to set your crop insurance guarantee. Which again, we're going to get to the point, if you need to cover high value forage, that might be pretty important. Another issue is drought protection. Most of these, you might not be able to take advantage of the harvest price option. The last point, there is an alfalfa revenue product under development. This would be multi-peril. AgriLogic out of A&M is doing it. So it could be a couple years, but that is going to come to market at some point. I got a link there if you're curious. Next, single peril index product. So this is a rainfall index. The first one is PRF. Have any of you used this personally? Yeah. So I think the awareness is pretty high of PRF, especially in the Flint Hills. We got a lot of producers using it in the Flint Hills, quite a bit in Western Kansas. But just as a brief review, when it rains less than usual in your area within 2 months, you get paid. So it's based on one thing, precipitation, and it only covers shortfalls in precipitation. Nobody's complained about that here. There's other states where people do complain that it doesn't cover excess precipitation. In your area, it's based on a grid about 15 by 15 miles. So that's something producers need to be aware of. The grid might not always match the field level, the farm level experience. So that's something you kind of gotta plan for and understand. It covers, the insurance periods are 2 months, so producers have to select 2 months periods throughout the year. Those are called intervals. So they're measuring precipitation within those 2 months. That's how indemnities can get triggered. And it can be used for hay or grazing. Participation has gone up quite a bit. So we started out 2009, it was really kind of gradually expanding. Went up quite a bit, 22. And then from 22 to 23, we went up 2 million acres. And I think there's a couple things there. So there was a drought in 22 and indemnities were really high, sort of across the board. So people were seeing their neighbors getting payouts during a tough time. And I think our crop insurance agents were also hustling and working, and a lot of them have decision tools and different ways that producers can analyze this and help them with, really individualized selection. So that continues to go up. So what's 5.5 million acres? It's a little hard to tell. I think we have 7 million acres of hay. Is that, Doug? That's something you keep in your head?
Not in my head, no way.
I think it's right. You can check me. And then, 15 to 20 million acres of pasture, but not all that pasture is gonna be, people are necessarily gonna want to insure it. It's gonna be actively used for grazing. So maybe 25%, third of pasture is covered, just kind of a guess. So it is growing a lot, but there's still a lot of places where it's not used. And this is the distribution throughout the state. We'll see if it goes up again next year. That the deadline is December 1st, and that would be for the entire 2025 calendar year. The next one is annual forage insurance. Can I ask who's heard of this? Have you used it? Yeah. It's pretty new. If you're familiar with PRF, the easy way to explain it is PRF for annually produced forage crops. The key difference is this, that you're only allowed to have coverage during USDA defined growing seasons. So it's pays for shortfalls in precipitation, sort of just like PRF, but the coverage begins after the month in which you plant. And then it can go for 4 to 6 months in the 7-month period after that. And I work a lot with John Holman. He's a K-State agronomist out of the Garden City area. And my understanding is that for a lot of, depending, it's different if it's fall or spring planted, but the moisture is going to be critical, right before planting, during planting, and right after planting. So that might be a concern with why adoption has been relatively low. That and that's a new change. You used to have some more flexibility to cover earlier or even during the planting period, and they actually changed it recently. And part of that was so people use it as it was intended. But that's one of the trade-offs. The deadline for that is July 15th. If you want to buy this on July 15th, it's going to be for all plants that are any crop that's grown for a forage. So fed to livestock, whether it's, grazed or made into silage, whatever, just has to be, get to livestock somehow. But so July 15th, if you bought July 15th of 2024, that would be for any annual crop that's planted for forage through July of 2025. So it takes a lot of planning. This is mostly used in Western Kansas again. You got a lot around the Finney area, Stafford has, but it's starting to be picked up a little bit. Central Kansas, I guess Central Kansas is an ongoing debate. I'll try to settle that. But it's increased quite a bit from 22 to 23, but still pretty low. I actually hear a lot about this being used for triticale. It's used for silage. But it's growing from a pretty low base. One of the things I look at with these different forage safety net products, there's a lot of quirks, but also what's the value of protection? Do these insurance policies cover the actual value of the forage you're producing? And I think that's an important question for lenders as well. Just a little bit of a review. Actual versus expected revenue when you're thinking about crop insurance. You have a liability or guarantee for a crop insurance policy. That's the coverage level times however expected revenue is being defined. For your multi-peril products for crops, that's your price based on futures markets times your APH yield. So that's a very personalized guarantee for a crop producer. I think that revolutionized risk management in agriculture. And that's well understood. For the rainfall index, it's based off of something called a county base value, which does not fluctuate with market conditions. It does adjust over time. So potentially a concern. So the question I have through doing this is, does the expected revenue or your crop insurance or guarantee liability match the actual value of that forage crop? So first of all, I looked at alfalfa, and these are using our Ag Manager crop budgets. I'll just go over this quickly. There's less alfalfa in here, but so if you look at the budgets, non-irrigated alfalfa, $768 per acre revenue. It's higher if it is irrigated. You'll get PRF. So let's say you want to insure hay with pasture rangeland and forage insurance, and you do 90% coverage, you're looking at $138 per acre protection. Now you can scale that up or down. You could increase it by 50% or decrease it by 50%. So you have some range in which you can pick for the value of that policy. For irrigated hay, it's actually less. And this kind of took me a while to figure this out. So I talked to RMA and they said, well, that's because irrigated hay is not really affected as much by declines in precipitation. So a little counterintuitive, but again, you can scale that up or down. But the main point here is that for alfalfa or any high value forage, PRF is only going to provide partial protection. You just can't increase it enough. Really close. I looked at sort of the average, rolling average of non-alfalfa hay, grass hay, for Kansas, $174 per acre. So your PRF really matches average values of grass hay with a little bit of flexibility in there. So that might work for a lot of producers. This is just going to skip. This is alfalfa in Scott County. It's pretty similar. Next, I looked at grass hay in Saline County. So and this is, I looked at 2023, the state level values. So you had an average yield, 2 tons per acre, average price, 162, a little dated now, but you're looking at about $300 of revenue per acre. Prices would have been higher in 2022. But how does this match to the PRF, the county base value? So what those guarantees are based off of? It's higher, but it falls just within the range. So if you're producing grass hay that's not high value, not on the high part of that sort of average, PRF should be able to cover the value even during relatively high price periods. Questions? All right. Skip this one. Next, triticale. I thought I'd compare the annual forage, which you could use for that July 15th deadline, or you could use the yield product, the APH product. And so this is a 2024 policy. The RMA price was $5.57. So they're not using futures markets for this. But depending on what your practice was, you could have an expected revenue of 156 to 262. Now, if you have you're producing some entire value, potentially a contract price would have been an option. But that's if you're just using the RMA prices. What about the annual forage county base value? 286. So pretty close. And those annual forage base values are going to be higher than PRF because the annually grown crops would typically be higher value. And so you have a a guarantee that really is pretty, contains what you're getting for the APH, so. Unless you're doing a high sort of, have some type of premium contract, they're pretty comparable. So to kind of wrap up, with what isn't covered for forage under federal crop insurance, there's mostly it's a little bit tricky to use revenue protection if you're not sometimes people can say for corn silage. If there's not that harvest price option, you don't see your guarantee increase during a drought when prices go up. So replacement cost might be a challenge. The rainfall index products, these have been increasing in popularity. They're not going to fully cover high value forage. You might still use them because they do provide some protection. They're single peril, so they're only covering precipitation shortfalls. And they're not going to cover sort of local precipitation that's different than the grid. And they're also not going to cover precipitation that doesn't influence yield. So if you get say you look at a 2-month period, and let's say you get your average rainfall on the last day of that interval, and it comes down quick and it goes away. That's still average rainfall. I don't know, I don't think that's super common. I'm not surprised if it happens, but if that happened to you, you'd be pretty upset, or I would at least. That'd be pretty annoying. And so, those are the issues for the rainfall index. I wrote a beef tip. The 2 sort of pieces of advice I have if you're concerned about this. There's a lot of information out there where you can figure out how bad these risks are for your area. You can go and look at historic rainfall, rainfall indices for your grid going back at least 20 years. Crop insurance agents have some great tools. So you can figure out, there's pretty good information out here, if you want to protect against these kind of risks. There's pretty good information to see how bad these issues are. The other thing that the way you could look at it is kind of looking, instead of trying to have that match up perfectly, think of especially with PRF, think of it as sort of a long-term savings account to manage risk. So yeah, especially especially during a non-drought year where rainfall is kind of spotty, it might not perfectly match your experience, but if you're using it consistently, most producers come out ahead. And that money can be saved for however you want to manage risk. So those are the 2 perspectives I have on that. Questions? Other programs, whole farm revenue protection. What it sounds like. There's also micro insurance. RMA's been promoting, but covers all revenue on the farm. It was designed for smaller local or regional foods, diversified operations, to try to help them take part in crop insurance. I think something like 7 policies sold a year. It's not used a lot, but if you fit that, it is an incredibly good value. The premium subsidies are basically like enterprise rates or better. So it is a good value, and I have heard of it being used for alfalfa. So if you want to cover something that's higher value, it is potentially an option. So I like to make sure people are aware of it. There's good information available. Then you have your FSA programs, so livestock forage disaster programs. It's going to make payouts when drought is severe or worse than severe during the grazing season. ELAP, payments for hauling water and hay during droughts. Then you have your non-insured disaster assistance program, NAP. That provides catastrophic coverage for forage crops. And my understanding is if you're considered underserved, it could be free. So some people use it because it doesn't provide a lot of protection, but it might be a good value. Do any folks from FSA have anything that's worth adding? These programs? There's a couple of here. Okay. I found, when I go out and give talks, that awareness is pretty high for these. So people have used them. Heard a couple of conspiracy theories with LFP, but.
And it's still capped, right? 125,000.
Someone from FSA. Probably. So bottom line, the safety net for forage and cattle is growing. They keep introducing new products with new deadlines and new rules. So it's a bit of an effort to keep up with it. So I think there's sort of this continued awareness gap. And you can insure almost everything. I think it's everything, but usually there's an exception. So, you know, PRF annual forage, you know, if that doesn't work, whole farm might be an option. So there's really a lot out there. If you're using PRF and you take the LFP payments and a lap, that's gonna be a lot. I've added up those numbers. Those are gonna really help if you want to purchase hay during a drought, even if the price is high. So, you know, add all those together, provides some pretty serious drought protection. All right. The next thing is I'm gonna talk about some hay inventory tools we had. So Robin developed a spreadsheet that gets used quite a bit, and this was really in response to calls she was getting from agents and other people about trying to figure out how much hay, how far their hay could stretch during the 2022 drought. I think now that, you know, the state's dry, some places have had good crops, others are kind of struggling. But the tools we have, there's a spreadsheet that we've had for a while. The new one is an online tool. So you can go online and estimate how much hay inventory you have and how far it would go with how much cattle or other livestock you have. So this is a quick and simple estimate. If you want something that is more reflective of reality, we have a spreadsheet called the advanced tool. So it's a lot more flexible, but because of that, it's going to take more time to do and have more input. So I'm going to go over those. It's kind of clunky to go through a spreadsheet up here, but you can see there where to go for them. We have tutorial videos. We try to make them pretty intuitive. So I think some people have different personalities with reading the instructions. We have instructions, we have the tutorials. I personally just use something, and then when I get stuck, I go back to the instructions. So we try to accommodate everybody. Anyway, the online tool, so you know, go to agmanager.info, hay inventory calculator, and there's a link to this. And first of all, you got to figure out your hay needs. So what's your number? We have mature cows, lactating, couple other categories, and we have anything. So if you know your average weight, DMI is a percent of body weight, number of days, you could use this for any type of livestock where that information is relevant, if you can accurately estimate it. So yeah, days on feed. So we have some guidelines for the DMI. We have a definitions and suggestions tab. So that's something that, you know, if producer there's guidance for that. So first you estimate your hay needs. And that's gonna calculate automatically in the tool. The next step is you estimate how much hay you have on hand. So what are the number of bales? And then the hay in the field. We might add a couple extra categories for this as people use it, but again, it's supposed to be a quick estimate. And then you have to enter your hay characteristics. So feed and storage loss and hay moisture percentage. And again, if you know producer's not real clear on those, we have some guidelines from extension materials. So you enter all of this and it automatically calculates your shortage or surplus. And it'll go through and you know, how much do you need in tons? What's available? We estimate the storage and feed loss, and that gives you an estimated shortage, and we'll report it both in tons or bales. So kind of gives you a quick idea if you're over or under. From what I've heard from the hay market reports and talking to people, it's probably for a lot of places, the issue is being more over. What are you going to do with 2023 hay? So that sounds right. So you could that would work for this as well. The next is the advanced hay inventory calculator. This is gonna take a little bit of time. If you wanna use it, but you can save it, so you can save it and update it over time. And you can start with the instructions if you want. Try to make it pretty intuitive. So, it's the same, you're gonna, enter all your livestock, estimate what their needs are. You're gonna put in your hay in hand, hay in the field. We added silage categories based on feedback that we got. And for every row, you can add a feed loss, a storage loss, and moisture. I shouldn't say moisture, well, it works like loss, but anyway. So really personalized. We also added crude protein balance. Again, this is based on feedback that, with some disclaimers, it's not a feed ration calculator, but it'll give you an idea of how much protein would be provided if that's useful information. It's optional. If they don't want to enter it, they don't have to. But here's what it kind of looks like. Again, I don't want to go through a whole spreadsheet up here. But green is optional, purple is required. And this is hay to be harvested. So this is hay in the field or wherever you can do silage. So you're going to enter the acres. What do you think yields are going to be? What would you estimate storage loss and feed loss, depending on how you're going to use it? You have to put in a moisture percentage. And then that crude protein percent, it's optional. If it's useful for people, they can do it. And then it's gonna calculate automatically. We did add a silage, which looks pretty much the same. The silage moisture instead of hay moisture. So, if you're using silage, that'll help you with that too. And then it's gonna give you, again, a shortage or a surplus. So it'll be a surplus or a shortage. The number in tons will be there. We're also going to show you your crude protein shortage or surplus, if that's a concern. And then we put the balance here. We left this in tons. We figured if they go through all the work, if this is something they want to use, it probably wouldn't be too big of a conversion to bells. And we do, okay, this isn't tough, but we do allow for flexible bell weights. People might use different kinds of bells, so we want to be flexible there. So if you do this and you have a shortage, you might have to purchase hay. So we added a simple spreadsheet where if you could get prices for different hay you could buy, how much is available and what's the price, it can tell you what that cost is going to be and is it going to meet your needs or not. So there's a budget tab in there. Let's say you want to know the value of what you have in hand. So you have a surplus and you want to try to maybe sell some or figure out what you need to use. And this one will populate automatically. So your hay on hand and your hay to be harvested. So here I only entered hay to be harvested. So you enter into the primary spreadsheet, it'll show up here. The only thing you have to enter is your estimated price per ton. And so that's, use the USDA reports or collect local information otherwise. Questions on this? So we are, we just put these out with the past couple of months. We're gonna, work with some producers to get some actual or very realistic scenarios to put there as well. I think people would probably use it differently depending on what kind of situation they're in. But might do some short videos. And we're gonna regularly update that based on producer feedback. I'm gonna step back and go back to so any question on the hay inventory tool? Anything else you'd like to see in that broad category? Okay. The other part is, going back to forage insurance, where it seems that there's an awareness gap, or that people say that insurance is a barrier to using forage. I think there is an awareness gap because I keep hearing about it. I think it also may be related to the product attributes. So You know, most of these forage options don't work the same way as your standard crop insurance product, so you're looking at something that only covers a single peril. Or might not cover the full value. So I don't know, does anybody have any thoughts on what they see? Are people aware of these options? Or is it more of an issue if they're aware of it, but it doesn't really fit their needs? So awareness of PRFI? People know about PRF? Is it different in some areas than others, or for some producer types than others? Got a couple, not, you guys are quiet. I give her the first time.
That like our local customers in Plant Hill and stuff probably use a lot more, but like my family were more in Douglas County, like eastern Kansas, and we get more rain in some places, even if our pastures are good.
So you say you don't really worry about it? It's not a risk that you're worried about? Or that insurance agents aren't promoting it as much, or it's just not as much of a.
I think like
I think for my family at least, I mean, we do worry in some years. I mean, the past year, we thought we were gonna have to haul water, which we've never done in Douglas County. But I mean, that doesn't mean the county itself wasn't getting rain, and so it's not a product we use personally. It's still a risk for us, but sometimes the product isn't worthwhile if, you know, for your ad, so.
Makes sense.
When it came to rainfall index, I've used that in the past, and basically it's a break even. I mean, I get my premium back, and pretty much like you said, if you're in that 15-mile grid, if you aren't, you know, someone in that grid where they have the gauge or that was disappointing. Last year was very disappointing because I thought if any time I would get paid something for my alfalfa, I would get it last year.
Okay.
And I just got a little bit above my premium. So it might make you feel better that you have something and you get your premium back. So it's a wash.
Yeah.
But you're exactly right. But the grids, if you're in the right spot, but if 15 miles, that's pretty good, especially like this year, someone can get 3 inches of rain and the other person a mile away just got 0.
Anything else about alfalfa? Okay, so I'll wrap up that. The other thing, another hat I wear is on the farm policy, farm bill side, and the sort of non-traditional or non-bank finance side. And there has been, so the farm bill's expired. They'll probably do an extension by the end of the year because they've always done that because we don't want to go back to the 1949 farm bill. But there's talk about if there is an extension, trying to have some type of ad hoc payments in the next spending bill, which has been the norm. That's why we had all the ERP. It was spending bills or appropriations where that got added in. You know, the idea being that, especially for crops, farm income is pretty tight. And one perspective on that is, so crop farm income is down, it's average to low. So if you look at, say, the 20-year average. So profit margins are tightening. The farm sector as a whole has more debt than it's had. We've been adding debt in the past 20 years. So there's more debt somewhere and there's tighter crop margins. And I've talked to different lenders and credit managers over the past few weeks, and that's kind of the sentiment that things are getting tough, but there's not panic. But my big question is, where is that debt? And who's gonna get in trouble? How quickly is it gonna happen? So I might come talk to you at breaks or lunches just to kind of get an idea of what local conditions are, because that's something that's kind of hard to get from more aggregate or even state level measures.